Right, Sterling Aussie. The trend predator indicator is showing us that it is conflicting. So it's probably something we would want to stay clear of and look for a better engineered chart across a different asset. But Sterling Oz is giving us a setup, which is a fake out low continuation low of day. What does that mean? It means it's a fake out low of the previous day. There is the previous day range. This is today. We have broken the low today, but we've come back inside. Markets typically do one of three things. They break out and they pull back and they continue. In that case, it would be a breakout, pullback, and a breakdown continuation trade, right? But instead, the other thing that markets do is they break out, they pull back, and they fail. And they go back to the other side of the range that they're breaking out of, which would be the highs of Monday. Okay, that would be a failed breakdown, wouldn't it? So at the moment, it's a fake out low. It's faked out of the low of yesterday. That is bullish because essentially what's happened, you've got traders that are trapped going short and we're getting squeezed. Okay, that creates liquidity for the buyers. The buyers are going to want to offload to unwilling buyers. So these buyers will become sellers to these sellers that will come buyers. Where are their stop losses? That is where the market could gravitate to. And if you're a seller, where will your stop loss be? If you're selling that market today, if you're in Asia and you are selling that, you'll be stopped out probably by now. If you're in London and you're selling that, where are your stops? Maybe above the London highs, maybe above the Asian highs. If you're a buyer, where are you going to target? You're going to target the stops. If you're holding on to that position and you haven't been taking money or pulling your stop loss down, okay, that's where your stops are likely to be on the day. Okay, so that is the thesis, that we're heading higher. However, it's conflicting because of the weekly fake out high. What does that mean? So on Monday, we broke out of Friday's highs and we pulled back inside of the range. That's a fake out high on the week, on the weekly level. That's bearish. Therefore, this is conflicting because we have a market that is bearish on the weekly chart, i.e. we've broken last week's highs, but bullish on the daily, i.e. we've broken back above the daily low, and therefore we've got sellers and buyers meeting in what is known as a barroom brawl, i.e. you don't want to be fighting inside of the range, so it's not something I'd be looking at currently. There's the range. These are the closing price, the low of today, the low of yesterday. All right, and all of that can be regarded as a barroom brawl. Bulls and bears going at each other and creating a sideways ranging market. That's the other thing that markets do, is they range sideways between levels, and that's exactly what we're seeing. Okay, so that's the trend predator indicator telling us that it's conflicting. In other words, go away and look at a different currency asset pair to trade that is giving you a better engineered chart for a higher probability trade setup. At the moment, Sterling Oz, there is nothing to do. It's just going sideways, and it can go on like that until it doesn't. Eventually, this coil will break out one way or the other, and that is when you want to be looking at trading the market, when you actually have momentum and a trend in place. At the moment, there is no trend, there is no momentum, so that's that. So if you want to learn more about how to use this indicator, then there's plenty of information in the Trend Predator channel on Discord, on my YouTube channel as well, in the description of this video, of how to get a free trial of the indicator and all of the knowledge that you would need to be able to apply it properly to your analysis, and to be able to use it to help you identify well-engineered charts for high probability trade setups. And feel free to reach out to me for further information.